Chasing winners is how most investors guarantee they'll lose. Think about that. Every time you buy what's already soaring, you're paying for someone else's discipline with your own money. How much has that cost you? Let me make something clear. The most expensive click you'll ever make isn't when you sell in a panic. It's when you buy because everyone else is winning. Right now, as I'm recording this, NBIS is up nearly 5% today. CRWV jumped 2.5%. And somewhere, an investor just opened their app, saw those green numbers, and felt something shift in their chest. Not strategy. Not analysis. Fear. The fear of being left behind while others get rich. Here's what that fear costs you. It's not just the money you lose buying at the top, though that's real enough. It's the systematic destruction of your investment discipline. Every time you chase a winner, you're training yourself to react instead of reason. You're teaching your brain that other people's gains are your signal to act. And once that pattern sets in, you become permanently reactive. You'll spend the rest of your investing life responding to what already happened instead of positioning for what comes next. Epictetus saw this 2,000 years ago. He said wealth consists not in having great possessions, but in having few wants. But here's what he meant for investors. Your competition isn't other investors. It's your own emotional reaction to what other investors are doing. The moment you start measuring your success by what's trending today, you've already lost, because you're chasing an outcome you can't control while abandoning the one thing you can control, your own strategic discipline. The investor who buys NBIS today at 193 because it's up 5% isn't making an investment decision. They're making an emotional transaction. They're buying relief from the anxiety of watching others win. And the market, which is very good at charging premium prices for emotional relief, will make them pay for it. Not today. Maybe not this week, but inevitably. Because prices that rise on momentum fall on momentum. And the investor who bought for emotional reasons will have no framework for knowing when to sell. This is the hidden cost nobody talks about. Chasing winners doesn't just lose you money on that trade. It corrupts your entire investment process. Because once you abandon your criteria to chase what's hot, you no longer have criteria. You have rationalizations. And rationalizations shift with every market move, which means you're now playing a game where the rules change based on your anxiety level. Let me show you what this looks like in real time. Marcus Sterling sits in his study, worn leather journal open, reading glasses hanging on that silver chain. Markets are calm today. S&P down 0.33%. Nothing dramatic. But his phone shows the trending stocks. NBIS up nearly 5%. CRWV climbing. He doesn't open his brokerage account. He already knows what's there. Positions he entered with specific theses at specific prices. Nothing about those theses changed in the last 4 hours. Across town, Alex Chen is staring at his smartwatch. Third time in 20 minutes. NBIS keeps climbing. He sees the chart. Clean breakout. Volume surging. Everyone on his trading Discord is talking about it. Screenshots of gains. Rocket emojis. And Alex feels it. That tightness in his chest. Not excitement. Anxiety. The fear that opportunity is slipping away while he sits here doing nothing. He opens his research. What does NBIS even do? Doesn't matter. He can read about it later. Right now, the only thing that matters is the price is moving, and he's not in it. He's about to click buy when something stops him. Something Marcus said last week. The question isn't whether you'll miss opportunities. You will. Thousands of them. The question is whether you'll protect your capital for the opportunities that match your actual strategy. Alex closes the app, picks up his coffee, hands shaking slightly. This is harder than it sounds, because his brain is screaming at him. NBIS is up 5%. If he'd bought this morning, he'd already be up. That's real money. Money he's losing by sitting here being disciplined. But here's what Marcus understood that Alex is learning. That 5% gain isn't his opportunity. It's someone else's exit. Somewhere, an investor who bought NBIS at 160 or 170 is watching this momentum spike and taking profits. They had a thesis, a target, a plan. The price hit their number, and they're executing their strategy. Alex, who has no thesis, no target, and no plan beyond it's going up, wants to pay premium price for their disciplined exit. Marcus taught him to ask one question in moments like this. Not, will this keep going up? Not, am I missing out? One question. If this stock dropped 20% tomorrow, would I buy more or sell? If you don't know the answer before you buy, you're not investing. You're gambling on momentum you don't understand. With money, you'll panic sell the moment that momentum reverses. Alex looks at NBIS again. Honest answer. If it dropped 20% tomorrow, he'd have no idea what to do. Because he doesn't know what it's worth. He doesn't know what changed to justify the move. He just knows it's up. And he feels left behind. That's not investment criteria. That's emotional reactivity. And emotional reactivity is expensive. So he does something that feels completely wrong. He writes down NBIS in his journal. Not to buy it, to study it. If this company is genuinely compelling, it'll be compelling at 193, at 210, or back at 170. And if he can't articulate why he'd own it independent of today's price move, then he has no business owning it at any price. 3 weeks later, NBIS is at 178. The momentum faded. The traders moved on. And Alex, who didn't chase the winner, still has his capital, still has his discipline, still has the capacity to make reasoned decisions instead of emotional reactions. He didn't make 5%, but more importantly, he didn't lose 15% buying excitement and selling disappointment. Marcus showed him the real math. It's not about the wins you miss. It's about the losses you avoid by not chasing them, because every dollar you don't lose chasing someone else's winning trade is a dollar that compounds in positions you actually understand. And over time, over years, that discipline doesn't just protect your capital, it transforms your relationship with the market entirely. You stop measuring yourself against what's trending today. You start measuring yourself against your own strategic consistency. Here's what you do next time you feel that pull toward what's already winning. Before you click buy, write one sentence. I am buying this because, and complete it without using the words up, momentum, or everyone. If you can't finish that sentence with a genuine strategic thesis, you're not investing. You're chasing. And chasing is how disciplined investors extract money from reactive ones. Keep that sentence visible, not as a rule, as a mirror. Because the investor you're becoming isn't the one who catches every winner. It's the one who doesn't need to. The one whose returns come from patient execution of sound strategy, not emotional reaction to other people's gains. Knowing the principle isn't enough. The next video shows exactly how to apply it.